You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again with Education Wednesday. That means it's time for the premier educational program out there. It is time for Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Of course, you guys know you can get us on just about every platform under the sun on demand if you want to step up your game to the live, and also join us at a great Pro Q&A yesterday with the one and only Flow Master himself, Mr. Henry Schwartz, talking about all kinds of cool things in the world of options and options flow, which is a hot area these days, to say the least. Of course, Options Oddities every Friday. Our great Options Pro Trading Crate giveaways, which are, I do believe one is coming up post-haste right now, actually. So it should be quite fun. Check it out. You know where to go to learn more. theoptionsinsider.com/secret club. And of course, wherever you go, wherever you listen to this show on demand, after the fact, however you get it, keep hitting us up, those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you guys and gals out there. And of course, if you like what you hear on the on-demand side, we do appreciate it if you do leave a review. We like 5 stars, but hey, whatever floats your boat. If you have it less than that, just direct it to Dan. It's crazy times. Markets are still crazy, and we are seeing just a massive influx of new people to the world of options every week. And they go to major outlets like your Apple Podcasts or your Spotify. They type options and they see what they find. And they see us, who haven't been around for a while, a lot of great reviews and a lot of great placement in those stores. That helps, but your reviews do continue to help the new folks enjoy the show. Like this week, we have, I think this is from Podbean. Don't go out to Podbean too often, but I know a lot of you like to listen to the show there. It's available on pretty much every platform under the sun. And we have Adzao. I like that. Adzao says, love you guys. Entertaining and informative is just the beginning! ! 5 stars. Well, thank you for that, Adzao or Adzao. I hope I'm not butchering your name, and everyone else who takes the time to rate and review. We really do appreciate it out there. And you know who else appreciates it? Even though he doesn't always say so. I have to drag the words out of him. He is the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call MTM. Mr. Dan, welcome back to Options Bootcamp, sir. How go things in the land of market taking?
Well, things are pretty darn good, Mark. Just trying to give as much as I take. You know what I mean?
Don't we all? Speaking of giving, sir, funny you should use that choice of words, sir, because we're going to turn things up to 11 right here at the start of the show, something we've never done before here on Options Bootcamp. Done it a bunch of times on other shows like the Option Block and stuff. I thought we'll mix it up this month. We shall do it this time on Options Bootcamp. Dan, we are about to give away the January Pro Trading Crate. So one of our Secret Club members is about to win a crate full of fantastic prizes. And Dan, you get to pick who it is. Are you excited, sir?
I do. That's awesome. All right. Can I pick myself or no?
Unfortunately, you are not a Secret Club member, so you are not eligible, sir, nor are any hosts or people who somehow are involved with the network. Unfortunately, no. All of this mountain of cool stuff that I'm looking at right now across the studio here. None of that will go to you, sir. So unfortunately, no. But what I can do is this. We have queued it up. We have our generator here for all of the different names and numbers associated with all of our members out there. And when I say go, Dan, whenever the spirit hits you, Dan, you're going to tell me to stop. I will pause our random number generator. That will pause on one of our member numbers, and that will give us the name of this month's winner. So are you ready, Dan? You think you can handle that Herculean task I have set before you?
Let's do it.
All right, I've hit the button. It is flashing before me right now, going all over the place. So, Dan, whenever the spirit hits you, you tell me to stop, and I will read out our winner. Are you ready? So whenever, it could be 5 minutes, could be half an hour. We could have sit here waiting the whole show. Whatever floats your boat, sir.
All right, ready?
I'm ready.
Stay a little longer. Hold on.
You almost got me.
Stubing, Captain Stubing.
A Love Boat reference. Wow, going deep.
What other ST words are there? Stop.
Oh, whoa. Okay, there we go. I got it. Perfect timing. Reflexes like a cat. All right, here we go. Dan, you have selected. Oh, your namesake, Dan Twyman, another Dan out there. All right, so Dan, giving a little Dan love back out there. So Dan Twyman, congratulations. You are our winner of our Pro Trading Crate. Our producers will reach out to you. They want to know your sizes and a few other choices. You get to choose an educational item, which, by the way, Dan, I don't think we have any Dan P books in our educational offerings. We have a bunch of other books in there. So if you want to make your Dan P offerings available to the masses, just let us know or send one or two over to the studio. We'll make sure you are included. Whenever people win the box, they get to choose from a whole bunch of educational offerings. And so we could put Dan P in there as well for some fun and a whole bunch of other great swag. You get exclusive swag that you can't get anywhere else because it's just pretty much for our team members here, as well as a whole bunch of other stuff. As you can imagine, we have amassed quite the collection of items from the past 15 years of the options market, all brand new, all untouched, all in our storage. A lot of it from firms that don't exist anymore. So it's kind of one-off cool stuff. So trust me, it's pretty. Each one of these is bespoke. So I only do it once a month. It's an effort. It's an expense, but we like you folks out there. So if you want to learn more about this and how you can participate in the February drawing, theoptionsinsider.com/secret club. Meanwhile, we got to get on rolling. It is time, listeners, for your questions. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
Our live listeners are all saying, pick me in the chat, Dan. Unfortunately, it doesn't work that way, guys. I wish I could just say, yes, you win this month. But we have to make it a little bit more fair, a little bit more robust than that. Hey, don't blame me if Dan chose his namesake Dan this month. That's on him. Send your hate mail to Dan over there. I think you got something going with Mr. Twyman there. I think you two are colluding behind the scenes, Mr. Dan, because that seemed a little jury-rigged to me. I'm just saying that. All right, let's get out. Actually, before we get to this week's question, really quick, Mr. Dan, our folks want to know, what's your rating, sir?
Oh, man, today the options radar screen has been lighting up. Well, yesterday, was yesterday? Yeah, I think it was yesterday. I got into POW, P-O-W-W. But the big ones today were, well, B-Big is back in play. Prague is back in play. As well as a whole bunch of other ones here. Hold on a second. Let me check my list again here. Yeah, we have SDC in play. We have Mankind in play. AMC's been doing well. That one's up 10% here today. Yeah, today's a really hot day for Options Raider.
What are you doing talking to me? You should be raiding, sir.
Hey man, I raid.
When Dan sounds distracted, listeners, it's because he's off raiding. See the literal costs we take to do these shows for you listeners. We're actually missing out on great trading opportunities as we speak. Speaking of opportunities, that's our question of the week for you folks this week. We wanted to know if you guys had to buy a 10% out of the money call expiring at the end of the year, December 31st, on one of the following names, which one would you choose? Gave you a smattering of choices. Some beat up pandemic names, which are looking a little better now, like Peloton. Facebook, that one's gotten, I think, shall we say, beaten up a little bit of late. Robinhood, also another one that's gotten beaten up of late. Or the old standby of SPY, /SPX. Mr. Dan, if you have a vote, have at it. And then more importantly, what do you think our audience is voting for this week, sir?
Oh, man. So if you have to buy a call, 10% out of the money, you said?
10% out of the money expires December 31st.
Oh, December 31st. That's a good one, isn't it? I'm going to say maybe Facebook.
Interesting. You think our audience is going that way as well?
I think that they're going to say something like Peloton.
Okay, so Dan goes for Facebook, our audience goes for Peloton, and actually it is a exact tie right now, which is kind of interesting. Both 31.9% for the SPX and Facebook, both tied. So there's still a lot of bulls for the broad market out there looking for a 10% rally on the heels of all this madness out there. Facebook, I could see that one has gotten beaten up quite a bit of late, so it may question mark may be poised for rebar, may be poised for more downside. We shall see. And then we have Peloton, 19.1%. If you actually had bought said call at the beginning of the week when we posted this, you're probably looking all right now. Peloton had a nice little pop off the rumors, of course, of the acquisition, then their numbers and firing their CEO that everyone wanted to get out of there, and a bunch of other things going on out there. So it's and cutting costs. So market tends to like that sort of thing. And then Robinhood bringing up the rear at 17%, which is interesting because we asked a similar question last week. We asked you, are you guys starting to scoop up some of these hot pandemic stocks that are now get a little bit beat up, shall we say? And on that one, we gave you three choices: Peloton, Robinhood, AMC, or other. A lot of you wrote in for Rocket, by the way. So Rocket is probably like our default number 2 here, really, on this poll. But 56% of you chose Robinhood in that poll last week, followed by AMC number 2, 26%, Peloton number 3, 13%. And actually, I think Rocket was probably really number 2, given how many write-ins we had for that one. Last week, we also asked you, what do you guys like to do in high skew environments, which we have seen pop up a few times over the past few months? Gave you 4 choices there: long puts or put spreads or collars. Not exactly the ideal trade for that kind of environment, but we put it in there. Short puts or put spreads or bullish risk reversal, so taking advantage of that jacked up skew. Put butterflies or ratios. You can also use those to take advantage of high skew or other. And let's see, 56.5%, actually the exact same percent that voted for Robinhood also voted for short puts, 56.5% for each, followed by 21.7%, so almost 22% still want to buy puts or put spreads or collars, even in a high skew environment. That's a very challenging trade, so I'd love to know how you make that pay off. Followed by 13% for put flies and ratios. I thought those two would be flipped, quite frankly. And then about 9% for other, which a lot of people wrote in for other. A lot of people didn't send in what their other is. You have to give us what your other is. We can't just guess. We're not mind readers here, listeners. So get on over to @options and make your voice heard. And last week, Dan, you and I chatted about gamma squeezes. Figured we'd have some feedback on that, and we do this week. First, let's go to Trend Wizzo. I just like this handle. He says, does the 10-year have a gamma squeeze still in play? And he says specifically, if Dan P could answer, that'd be great for my followers. So Dan, I'm just going to take a break here. This one's all for you. I'm chopped liver here today. And he wants to know, does the 10-year have a gamma squeeze still in play? So he implies that there was one in play. He wants to know if it's still in play.
I don't really know if I would call it that. That's it. Oh, the 10-year futures. Okay. I don't know, man. To me, like defining gamma squeeze, like I would personally put that as like an incredibly profound scenario in like, accompanying like something crazy like a short squeeze where it's just like massive move, like 50% move, something like that, blasting through strike after strike after strike. Like to me, that's like a gamma squeeze. Like gamma, like negative gamma and positive gamma for that matter, they do come more into play in smaller scenarios. So I don't know. I mean, I guess it's fair that maybe we could call it that. Geez, I don't know, man.
You're not giving his followers a lot of love. He really wants you to give love for his followers.
I know. Trend Wizzo, you know what? Let me pull up the darn 10-year futures here. Hold on. Come on, baby.
I see what you're saying, though, about the 10-year, because I mentioned when we were talking about gamma squeezes, these are mostly, like I said, some of these smaller names that have a lot of these other perfect storm characteristics pop up. We mentioned GameStop in the early days of that when it blew through a ridiculous amount of strikes to the upside and then the market makers were caught short. That's usually a scenario that's a lot easier to happen in a smaller name. Not saying it can't. I mean, the example I actually gave, and one of the first times I ever remember encountering this, was in a big liquid product. It was in the SPX. That's the first time I saw it. We called it at the time an upside crash. We didn't really call it a gamma squeeze, but it was the same thing. We kept blowing through strikes. The SPX back then kept rallying. I'm trying to remember exactly when this was. It was sometime in the late 90s, as I recall. And we kept blowing through strikes to the upside, and that's exactly what happened. That short strike effect kept kind of accelerating everything to the upside. We had to scramble to buy back our gamma. So vol actually popped as we rallied to the upside. The futures kept rallying as we tried to buy back all of our short gamma, and we kept blowing through strikes that the entire pit was short. And so what effectively was a gamma squeeze in the SPX. So it can happen. I'm not saying it can only happen in the smaller names. It's just extremely rare to have the perfect storm setup in a big, deep, liquid name like the 10-year and the S versus a smaller meme stock. All right, Dan, I bought you some time. You got something more for Trend Wizzo and all his followers, so they're hanging on you everywhere.
Yeah. So now I'm looking, and just full disclosure here, I typically don't trade the 10-year futures options, so I had to really kind of dial it in here because I didn't want to just BS you here. So looking at it though, and we blasted through 4 strikes over 5 strikes over the last week or so. So, I mean, that's a bit, but I like what you just got done saying, Mark, is just that, I mean, there is a fair amount of open interest and volume here. Here's another thing. Looking at so here would be a telltale sign. I have to do a little bit of forensics since this is not one that I trade on a daily basis. If you look at the volatility chart, I'll tell you what, it was pretty high on the 7th, the implied volatility. But it's definitely kind of come crashing back down from there. So that being said, if implied volatility is very low, that means that the market if implied volatility is not at like a sky high scenario, which it's not, that means that the market makers probably aren't short just like massive amounts. And by the way, massive amounts, I mean proportion wise, like percentage wise. Like I'm looking at just the 8 strikes here in the February and March. And there's, thousands at each strike. You go to the March, since that's like a regular expiration here, there's like 27,000, 25,000, 24,000. I mean, for what I would call like a real gamma squeeze to take place, I would say that the market makers would have to, I know this is going to be a little bit arbitrary, but they'd have to be short at least 80% of that open interest. You would just normal coin toss, they would be 50% open interest. I'm saying they'd have to be short at least 80% of the open interest, if not more, to affect that much, to have their negative gamma hedging affect the price of the underlying future by that much. And I don't know, I would be pretty surprised if they were short just most of the open interest. It's possible. I mean, I have seen crazier things happen. Yeah, it's not really that crazy, but I don't know. I'm thinking just with all that open interest and with March being with it having all that open interest and with implied volatility not at these nosebleed levels, I would say that right now it's probably not a gamma squeeze going on.
Yeah, if you guys want to check more data on this kind of stuff for yourselves, on any of these futures, options, products, we have great reports for you available through our This Week in Futures Options show. Just go to cmegroup.com/TWIFO, TWIFO, the name of the show, or /TWIO, This Week in Options. Both of those should work. go to the drop down there, go to the rates complex. You can pull up the 10-year for yourself. You can do some of these deep dives for yourself. Again, all completely for free because we like you. You can see the 10 years, there's no slouch when it comes to paper. 1.7 million contracts already on the tape right now. So you're talking about a very robust product. So you need a real strong concentration of liquidity on the short side for the market makers to really make a gamma squeeze happen. Like I said, not to say it can't happen, but it is exceedingly difficult in deep and liquid products like this. But it might be worth, I'm going to dig a little bit after the show maybe as well. But it's an interesting question, a fun one. We talk about gamma squeezes in these smaller names, not so much in these big, deep liquid ones all the time. And maybe we'll revisit this tomorrow. Who wrote this? Trent Wizzo on our TWIFO program. We actually have some folks joining us who are rate specialists there tomorrow. So maybe we'll revisit this there tomorrow. Because I know you said you listened to that show as well. It sounds like a good topic for TWIFO as well. Since we're talking about gamma, let's go to this one here from Chris. This actually came in, Dan, this week on our Pro Q&A. So Chris is one of our Pro members in the secret club there. I thought it'd be a good one to discuss on this show as well, because it kind of relates to what we were just talking about and what we talked about last week. Chris wanted to know, what are your thoughts on GEX, aka gamma exposure, and do you feel it is something retail and traders should focus on? Now, when you talk about gamma exposure, there actually is listeners. There's this kind of, I won't call them a cult, but a devoted group of people who are adherents to this quote-unquote GEX, which is the gamma exposure of the market makers in different products out there. This kind of relates to what we were talking about earlier with the gamma squeezes, but it's a little bit different too. A lot of this GEX philosophy centers on trying to find the point that they call the zero gamma point, which is effectively the inflection point where the market makers and liquidity providers once you blow through that strike, they will flip from long gamma to short gamma. That's kind of the point you're looking for in that GEX philosophy. And then from there, you're trying to plan what gamma scalps the pit is going to do or the traders are going to do against that short gamma and try to plan some of your intraday swing trades around that. It's a very intriguing, it's a very precise type thing. It relies on a lot of assumptions, I think, but it's an interesting one. I kind of gave my thoughts on some of this earlier this week on the Pro Q&A, but I want to hear Dan's thoughts. Dan, have you followed this whole GEX thing, and what are your thoughts on it, sir?
I followed it just a bit. One of the problems that I have with it is, like you just mentioned, you are making a lot of assumptions. Like it's basically impossible to tell collectively how many contracts market makers are short. And especially with the different exchanges, some are long on some exchanges, some are short on other exchanges. And I just feel like there's potentially a little bit more noise in this sort of analysis than I would like to use. But if somebody wants to call me on that one, it could be an interesting conversation, but yeah, it's just kind of my sense that, like, how am I deriving this and how accurate is it? Because otherwise, why use it if I can't be super confident in its accuracy?
Yeah, there are a lot of assumptions baked into this. You're kind of assuming perfect gamma hedges on the parts of the other people, and they could have all sorts of other axes to grind. Maybe they don't want to fully hedge their gamma. Maybe they have other positions against it you're not aware of. Maybe they want to do something on a ratio or something like that. So if you're planning on them to hedge their gamma a certain way, the one thing that you could count on back, when we were on the trading floor was that everyone dealt with their gamma in a very different way. People had all sorts of different systems for doing it. And so the notion that, okay, here's this 0 point for the gamma exposure, and now I can assume my swing trades are going to kick in. I'm going to put my levels at this level and this level to do something along those lines. There's a lot of assumptions baked into that. Now, if you like this GEX and you found that it works for you, I'm not going to dissuade you from using it. It's just people always ascribe these almost mystical powers to things like gamma. Options can just suck the stock to a strike or move it a ton. And the truth is, it's really not that simple most times. But it's interesting. It sounds like, Chris, maybe you have some experience with this. If you've experimented with GEX and it's worked out for you, or maybe it hasn't, hit us up. Let us know. I'd like to know your thoughts on the system, because it does seem like one of those ones that is predicated on a lot of assumptions, and one or two of those assumptions kind of falls by the wayside, the whole thing kind of collapses like a house of cards. Let's go out to the live stream, getting away from Gamma for a second. Luigi, my boy Luigi, one of our Pro Trading Crate winners in the past. He says, I have a question for Mark and Dan. Well, he sent it to the right place, Luigi. He says, I may not be related to the topic, but I heard a pundit say that there is no such thing as a portfolio hedge. I'm not sure I am on board with that. What do you guys think? Well, yeah, I'm not really on board with that either. I guess it kind of depends what frame of reference they're coming at it from, Luigi. If they're like some random stock guy on CNBC and they're talking about the old school quote unquote portfolio diversification model, right, where you allocate it across a variety of different assets, and the old CAPM model set around 40, then maybe around 24, and who knows what the hell the nonsensical number is now. If he's talking about from that perspective where no other assets really you can use to really diversify your risk perfectly, then I'm on board with him because he's kind of right. But if you're talking about what we talk about here on this show, which are options are really the only game in town. They are the only contractually guaranteed inverse correlation on the planet. So if you really want S&P inverse correlation, for example, you want to hedge yourself in the S&P, again, it can be pricey at times. So I get that and wanting to find ways to get around that. That's what a lot of this show has been devoted to. But if you buy that put on whatever strike, let's say you're on the 4,000 strike in the S&P right now, and we blow through that strike, that put's going to be there. And that is something you can rely on. So that is a hedge. And maybe he's also talking about the old days of people talking about portfolio insurance. That kind of became a bit of a dirty word out there. Some people thought that led to some of the crazy madness that ended up kicking off the 87 crash. So maybe he's talking about that kind of loaded term as well. But if he's talking about contractually obligated and guaranteed inverse correlation and diversification, then options are kind of the only game in town. Dan, what do you say to this pundit who says there is no such thing as a portfolio hedge, sir?
I mean, I don't know if I'm buying what he's selling there. I mean, clearly there is a portfolio hedge. It's just how correlated is it? How direct of a correlation is it? And clearly, like you mentioned, Mark, like with options that like you can get a direct correlation for sure. You just pay for it. But I mean, and I don't know if you've heard any more recent numbers on this, Mark. Maybe somebody like Russell Rhodes would probably be able to just, snap his fingers and rattle it off. But last I heard, the VIX has an inverse relationship with the S&P 500 about 80% of the time. Is 80% still the number that people?
That's the ballpark of it. They're somewhere between 75 and like low 80s, somewhere in that range. Yeah.
Yeah. And so, I mean, that is a portfolio hedge. I mean, it's only right 80% of the time, but we are talking a little bit of semantics here, but it is a hedge. If I own a pretty broad portfolio and have like either many stocks or I have like, I own shares of spiders or whatever, I mean, I can buy spider puts to hedge a portfolio depending on how correlated it is to the S&P 500, or NASDAQ puts depending on how correlated my portfolio is to the NASDAQ. Or I could take the long route and I could just buy puts on every individual stock that I have. That's a pretty time consuming and resource intensive portfolio hedge, if you want to call it that. I mean, there's a lot of ways to do it. To say that there's no such thing as a portfolio hedge is, I don't know, maybe he's trying to be sensationalist or something. I mean, there is. It's just you have to have some skill and some knowledge and do a little bit of math in figuring out the correlation first.
He says it was Sosnoff. It was a Tasty Trade video. So Tom should know better, so I'll have to go see the video and see exactly what he was saying. But sometimes he likes to spice it up a little bit over there as well, so maybe he was doing that. But yeah, there are obviously contractually obligated hedges out there. It's just a question of if you're willing to pay for them, if you do it in the right environment. Obviously, if you're buying expensive S&P puts at the time when the skew is really high, it's hard to make that pay off in the long run. So maybe he's talking about something like that because you get a slow downside movement that put's going to come crashing in. you still stopped out at that strike, but you paid an inflated level for that you're probably not going to get back. So maybe he's talking about something like that. But yeah, I'm not really on board with that overall statement. Let's go to this one here from Jake Miller. I'm trying to intuit what he's up to, Dan. He says, I'd love to get more info on how you decide when you grab a call on a stock and what indicators or Greeks you use to make sure it's time for you to want to buy in a call or even in reverse a put. So I guess he wants to know what we use to decide to buy a call and then what we use to take it off. And he goes on to say, the reason it's on the mind is I have an idea. I'm looking at a stock that might be down to a low, and I will watch through the day for the stock to drop some and the option to get cheaper and then grab it and sell it later that day for a short-term gain or hold if I buy the option with more time on it. I don't know if that makes sense or is it even a good strategy, but I would love more info. Dan, this sounds suspiciously like what you're up to out there in the rating sense, which is he's using options to kind of do some short-term swing trades on some of these stocks that he thinks are pretty beat up and maybe are poised for a pop. So if you want to mention some of the metrics, and as he specifically mentions the Greeks, which are your baby there, which Greeks you use to decide when to buy a call, and then on top of that, when you want to take it off. That seems to be the gist of what he's going for, sir.
Yeah, I mean, there's a lot to unpack here. There's a lot we can talk about. I'll just talk about a couple of things. I mean, one is you want to compare your delta versus your theta because, well, I guess in this particular case, you're talking about day trading it, which can be a little bit tricky sometimes with options. Because the bid-ask spread can represent a fairly large percentage, and that's a pretty big cost to have to make up on every trade, but that's neither here nor there. If you're holding it for longer than a day, like a week or something like that, you have to sort of anticipate what you're going to make on delta if you're right, and what you're going to lose on theta, regardless if you're right or wrong. So like there's one Greeks thing. When you're buying a call, or like you say here, the opposites, buying a put, the reverse, buying a put. But let's just talk about it from the call perspective. I mean, there's kind of two ways to look at it, at getting long any asset. There's buy it when it's cheaper, which is a value play, or buy it after it goes up, which is a momentum play. And those are really the only things you can do, and both make sense under the right scenario. In order for you to day trade in this manner, where you're waiting for like if you think a stock is going to go up, but you're hoping for it to go down, I don't know. Are there metrics involved there? Like, are you using some sort of oscillator, and you're looking for it to trade up and down within a pattern? Do you have a reason to believe that? Because otherwise, if you're bullish, why are you wanting it to go down? I mean, obviously, because you want to buy it at a cheaper price, but do you think it's going to go up, or do you think it's going to go down? So I would say that buying calls is probably more commonly like a momentum trading thing. Like you don't buy them after they go down, you buy them after they go up. After the underlying goes up. But I mean, you could probably make either work. It's just like, I have to turn the tables on you a little bit. Like, what is your reason for saying, I think that if this goes down, it's going to go back up? Are we looking at stocks where it's bouncing off resistance or bouncing off support on some short time frame? Are we using some sort of like RSI or slow stochastics as like an overbought, oversold indicator? Like to me, those are some things that you would really be needing to use if you're trading in this manner, and maybe you are, and that's great. And if not, I just gave you some ideas, and see which one makes the most sense for you.
Well, Mr. Dan, we kicked off the show with you picking your namesake, Dan, to win the Pro Trading Crate there. And then you had questions sent to you about gamma squeezing and everything. Dan's getting a lot of love on the show here today. So Dan, let's wrap it up with this one. We obviously get deluged with a lot of emails, a lot of questions, a lot of comments. A lot of people want to come on the show. So this one cracked me up. They're starting to send them to you now, Dan. This one just cracked me up. I won't say their names, but let's see. They sent this in. They wanted to follow up on their initial email. They say they really enjoy your show, Dan, and just left you a review in Apple Podcasts. They say, thanks for providing a great show to your listeners. Here's our review. And the review is Dan, host of the Options Bootcamp podcast, highlights all business, finance, and more in this can't-miss podcast. The host and expert guests offer insightful advice and information that is helpful to anyone that listens. Thank you. So that was Dan. That was their review. So apparently you're a one-man show here on Options Bootcamp, which is impressive. And then also here, they want to know if you would like to have their client, who is a leader in the $1 trillion shift from animal-based to plant-based protein, on your show as an expert guest. Dan, what say you?
Well, a couple of things. I mean, if this is like all my show instead of half my show, here's what I think we should do is I think that I can pick the next listener poll. And I think the poll should be, should we get rid of Longo after the next episode?
Oh. Okay, if you want to run the show yourself, hey, I could use a break every Wednesday. I'm down with that. I don't need to talk every day. I'm good. I like it. Dan has just volunteered listeners to do a full 1 hour show by himself every Wednesday. I would like to see that. I would like to see the Dan show for an hour, see what topics you prepare ahead of time.
Yeah, well, it is pretty helpful to have Mark prepare these topics. I will tell you that. I'll give him that. I might have the personality, the good looks, the smarts, but Mark is prepared if nothing else.
There you go. Boy Scouts, be prepared, baby. So Dan, I guess your answer is no on the plant-based protein shift guest.
That could be a little weird.
This is just, we spare you. You should see how many of these we get on a daily basis. People clearly do not listen to any of the shows when they send their pitches in. That's my favorite part. Options Bootcamp and the shift to plant-based protein. What could be closer to that? So yes, all those out there who are trying to get on the shows, first off, it'd behoove you to probably listen. We appreciate a nice review. That's very nice of you. It has nothing really to do with our show, but we appreciate the effort. That's the thought that counts. But yeah, listen to the show if you're trying to get your client on. And we don't obviously have a lot of guests on this show in particular, so you're better off on a lot of our other programs reaching out. And you should also know you probably don't really reach out to Dan. And you don't reach out to me even. You hit up our producers. They're the ones who handle all that booking. I'm just a pretty voice for the radio at the end of the day. And Dan, I don't know what Dan is. We'll have to figure that out. I thought that was a fun one to end on. So Dan, you've been just deluged with love. Everyone wants to get at you this week. If they want to get at you in a more official capacity, where should they go? What should they do?
Well, you can go direct. You're direct to the source, markettaker.com, 2 T's in a row. And I'd love to hear from you. We get messages from listeners on a fairly regular basis. You can join our chat room for free right now at this time, which is really great. A lot of great people in that community. Make your way over to markettaker.com, click join free, and we'd love to hear from you.
So Dan has said he is now taking over the hosting duties for this show. So I want all guest pitches to go to him. All booking agencies, now send your plant-based protein and other guest pitches, care of Dan at Market Taker Mentor. I want to see him handle the deluge that we spare him from on a daily basis. I'm going to start sending you some of these, Dan, just so you could see what goes on behind the scenes that you are spared from. But good times nonetheless. Hit him up over there at Market Taker Mentoring. And again, if you want to join us, you want to ask questions live, you want to join us for the pro Q&As, again, the audience of this program would really benefit from those pro Q&A sessions. We've had a who's who in the world of options answering your questions at your beck and call. We snap our fingers. They come answer the questions for you folks. just because we like you. Of course, we do Options Oddities every Friday, which that show is really fun. It's really evolved into not just a usual activity anymore, but also talking about some live trading and things that we have on, what's going right, what's going wrong. So benefit from our madness on that show, listeners. Watch the mistakes we make, the good trades we make. It's always fun and educational and informative for you. I'll probably get some good trading ideas out of it, too, as well. And that's, of course, all of that and more. Of course, the giveaway we just did at the beginning of this show, you could set up for next month's giveaway, the Pro Trading Crate. Each one is unique, and each one is pretty awesome, dare I say it, out there. So check it out, theoptionsinsider.com/secret club. You got Brian coming up in a little bit. I'll be hitting the network live to take next week, listeners. Next week, I have dragged him out of his cocoon. We're going to do a live huddle for the OPR 400th episode spectacular. So get ready for that. We will announce this weekend what the timing is for all that fun stuff and everything along those lines. So don't get Brian live on the network very often. That's always a fun time when we get that. So stay tuned for that. Then, of course, all the other fun stuff. If you have more questions about like the 10-year gamma and stuff, maybe we'll talk about that a little bit more on TWIFO tomorrow. Check that out, as well as the option block. Friday ball views, and, of course, Options Oddities for all you Secret Club fans. And we're back again next week all the way through to another Education Wednesday, another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.